You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everyone. Welcome to the Infinite Banking Mastery Podcast. Thank you for being here. Hope you're all doing great and enjoying your summer. Hope something's been fun. You've been doing fun things, going on vacation, enjoying your family. We've been doing all that here. We've had a lot of chaos recently with a big giant water leak, but other than that, things are great. So today I wanted to talk about the value of the death benefit. Let's not forget about the valuable death benefit. So what is the value? Of course, there's the obvious. The first thing that comes to mind is protecting your family, generally. You want to protect your family. If something happens to you, that's the first reason that people acquire life insurance, usually. Sometimes people don't think that their spouse needs it. Maybe they think their spouse is earning enough money at work, they'll be fine. And so they don't think about the extra things that the spouse does, or even a homemaker spouse. They'll say, I don't need insurance on her or him because I'm the one earning the income. Except that they forget what that homemaker spouse does or the duties that the other spouse does. They can be very helpful. Help cleaning the house, helping take care of the kids, running the kids around. A lot of times both parents are doing both of these things. And if there's only one of you, it becomes much more difficult. So having that protection if one of the spouses goes is helpful simply for that. Now you can hire someone to help clean the house, hire help for the things that your spouse used to help with. And just simply, have you ever just sat down and thought, what would your family do if you didn't wake up tomorrow? You should just sit back and think. I know, it's a morbid thought. What would my family do if I didn't wake up tomorrow? How are they going to take care of themselves? How are they going to pay the mortgage? Does my income very important for that? How are they going to pay all the bills, credit card bills, medical bills, health insurance? How are they going to get by? If you're the one bringing home the bacon, if you're the high income earner or your income is highly dependent on, you really should have coverage just for the coverage. Of course, we have infinite banking and all the awesomeness that comes with that, and that you can use it for so many other things and not have to really think about the death benefit. It's more like a side effect. But really, you really just should have some coverage if someone is depending on your income. Because what are they going to do if something happens to you tomorrow? And if something did happen to you, what would you want them to be able to do? Would you want them to be able to pay off all the debt, pay off credit card debt, pay off your house? What about the kids? Did you intend for them to go to college? Would you like them to be able to go to college still? Oftentimes when one spouse passes away and there's not enough funds and now they're scrambling to keep their home, or, now they're figuring out maybe we have to move. They're trying to figure out what to do. And so college might go out the window for the children. So you want to make sure that you think through all these things when you're trying to come up with a death benefit amount that's appropriate. What would be appropriate? What would I want to happen if something happened to me? And what would I want my spouse or my survivors to be able to pay off or to be able to still continue to do? First car for your child, all sorts of things. Something that people often forget too, or don't really think about, is that the two spouses that are together working, one may be depending on the others for their retirement income. Maybe that one person is earning more income, or one of you is earning more income, and that is part of what's being saved for the future into a retirement account. And now that person passes away, now there's no savings going into the retirement account, and most likely that account will be depleted pretty quickly. And so you might want to consider, how is my spouse going to retire? Where are those funds going to come from if something were to happen to me and my income is no longer contributing? How is my spouse going to be able to retire comfortably? Would you like your spouse to be able to not worry about that? Because when someone passes, obviously it's a tragedy, you're sad. You don't want to have to sit there wondering how you're going to keep your house. How are you going to eat tomorrow? Are you going to have to list your house? What are you going to have to do? All these different things. You want time to mourn. You want to be able to have that time to mourn. You don't want to think about all those things. So having that death benefit in place is certainly something that brings comfort and peace in a time of tragedy and chaos. So the family doesn't have to uproot themselves all of a sudden and go get 3 jobs just to be able to stay home and afford the things that they've always afforded. And so those are just some of the things you want to think about when you are pondering death benefit as well. Sometimes when we're building an infinite banking style policy, the premium going into it is low. It's a bit low because that's what they can afford. It's just whatever they can afford. And whatever that premium is will buy up a certain amount of death benefit, but that might not be enough death benefit for your family. So you might need to bump it up with some term insurance to at least get that death benefit higher. And then, of course, you can always convert it in the future when your income changes. You're able to bump it up, or at least you have the coverage as long as you can, as high as you can, or at a number that you think is important for the protection of your family. Some people are just thinking about they want to leave a legacy. They want to leave something to their loved ones. How would you like to leave this world? Would you like to leave it with a gift to your loved ones or maybe a charity? Would you like to leave something as a legacy for your loved ones to have a step up and then begin creating generational wealth for their family, their children, and their children's children? So the death benefit obviously does provide security and safety in a time of utter devastation and allows your family time to mourn. It's these reasons that are the most obvious when talking about the benefits of life insurance. This is what people think about. Oftentimes, or sometimes, people will say, well, we don't need a death benefit when we're older because we're growing our assets and our assets will be worth more and we won't need it. Our assets will be worth enough. And so we won't need that death benefit. The assets will take care of my family. Although, to be honest, I haven't yet met one single person who has said, I don't need that life insurance. I wish I didn't have life insurance. I haven't met anybody yet. Like, the intention is there to build the assets and do all that. And yes, it can work out for people. Although the more wealth you have, the more assets you have and accumulate, the higher net worth you have, then the more likely it is that the government will, after someone passes away, come after you for some tax money, some estate tax money. So actually, the wealthier you are, the better it is to have life insurance, because then when the estate taxes are due, which is 9 months after a person passes away, the family doesn't have to scramble to figure out what they're going to sell to pay the estate taxes. Maybe there's a family business, maybe there's real estate, and maybe they want to keep all that and they don't want to have to sell something or more than one thing to be able to pay the taxes that the government has decided are due. Because the government will have valuations for the assets, and then there will be a percentage of that that will be due for estate taxes. Of course, that's assuming that your assets are high enough that there even is an estate tax, because there's not an estate tax for everyone. So the fact is that the more wealth you have, the more businesses, the larger the business, the more real estate you have, the more useful a death benefit becomes. Another thing that's valuable about the death benefit is being able to maximize your pension, like we talked about last week. A large enough death benefit can allow you to select the higher payout option on your pension, allowing you to enjoy a higher income in your retirement years while building a pool of cash you can access tax-free at the same time. Aside from these 3 very important and life-changing uses for life insurance, protecting your family, preparing for estate taxes, for some people anyway, and giving you more options and the ability to keep more of your money for those of you who have pensions in your retirement, there are also uses for business owners. If you own a business with business partners, you really should have a buy-sell plan set up, a buy-sell agreement. Now, this is something an attorney would draft up for you, but also something that I could help advise you on regarding the life insurance need and the funding of that buy-sell agreement. A lot of times, business owners have a written buy-sell agreement, but don't have it funded. And really, at the end of the day, that's just an agreement to be able to sue each other for not being able to follow through on what the agreement says. In case you're wondering what a buy-sell agreement is, it is a legal contract that outlines what will happen to a business if one of the owners dies, becomes disabled, retires, divorces, or goes bankrupt. As an example, if a partner were to get too sick or hurt to work and could no longer take care of their duties as a business owner and wants to exit the business, how would you buy his or her portion of the business? As a side note, for this reason, it's also important to have a long-term disability insurance plan in place for the owners. If you or your business partner wanted to or needed to exit the business, how would you buy them out? That's where a life insurance policy really becomes helpful in this scenario for a buy-sell plan. If your business partner passed away and was married at the time, would you want to be in business with your business partner's spouse? Because the spouse will suddenly own those shares, own that portion of the business. And actually, the spouse would probably prefer to be paid off if that person is not already an active part of the business, does not have an active role. And so it'd be nice to have some funds to be able to buy out those shares so you're not having to have that business partner if that person has not been active already in the business. Or if your business partner gets divorced and now that ex-spouse would like their share of the business, it's nice to have a way to buy out those shares so you don't end up being in business with someone's ex. So again, oftentimes a buy-sell agreement is written but not funded. And a life insurance policy is a great way to make sure that your buy-sell agreement is funded so that in the event of a death, disability, divorce, retirement, there are funds available to buy your partner out or to be bought out. Another way that life insurance brings value to business owners is by covering the person that's running the business. If you are key to the success of your business, or you have employees that need to be there, that really run and drive the success of your business, the income, the revenue, key man life insurance is a good idea. These types of policies are often purchased on the life of the owners, the top executives, or other employees who are considered critical to the business. For example, if you have an employee who is a top salesperson and brings in a ton of the revenue, or is running your business, managing it, and your business would suffer significantly if he or she were to pass away, you can get coverage on this person to allow for your business to continue running while you find someone to replace that person. And these same types of life insurance policies can also be built in a way that would enhance benefits to valued employees. Whole life policies are a great way to ensure there is cash available to give a lump sum payout or a payout over time, usually it's a lump sum, to a valued employee at their retirement, or as a payout to their spouse or family should that person pass away before reaching their retirement years. So policies are oftentimes used as an incentive to have your top employees, your top executives stay with you and be able to receive those benefits once they reach their retirement years. And of course, some of you are very charitably inclined. Life insurance can allow you to truly bless a charity that's important to you, or maybe your church if you wanted to leave that last gift of love to a cause that's important to you. There are a lot of creative ways that life insurance policies can be used in conjunction with the infinite banking concept so that you can have all the extra benefit of using the cash in your lifetime, or purely for the benefit of the life insurance payout. And I'll just say again, if someone is depending on your income, you really should have life insurance, period. And not only the kind that disappears when you leave your job or retire, but the kind you own for a lifetime, an individual policy, a permanent policy, or at the very least, an individual policy. People oftentimes think, oh, I have it at work, it'll be fine, but don't think about, well, I might leave that job, or the job can change their benefits at any time. You might not always have the same benefits. You might leave to a job that doesn't have the same benefits, or has lower benefits, and 90% of the time or more, you cannot take that contract with you. Every so often, you can take the contract with you from your workplace, but usually it stays there and you don't get to take it with you. In addition, leaving your workplace and not having the insurance anymore, maybe at that time you're not insurable. Maybe something happened to your health. Maybe you got sick, and maybe you are insurable, but maybe it's not an optimal rating. And so now it costs more. or it's less favorable for you. So it's just important. I think it's a really big deal and a good idea for anyone to get that coverage for their family, to protect their family, and especially when they're as healthy as possible, when they're younger, when they're healthier. As you age, you never know what's going to happen. It's good to just lock it in. And the awesome thing is that while we're able to make this vehicle that's meant to protect your loved ones, we are also able to turn it into a powerhouse system that you can enjoy the benefits of while you're alive. So I hope this information was helpful to you in some way and look forward to sharing again next time. In the meantime, if you are interested in learning how IBC can work for you or are simply needing life insurance and would like my help as your advisor, please reach out to Valerie at alphaomegawealth.com. I would love to meet you and learn more about how I can help you build an awesome cash flow and saving strategy while simultaneously protecting those you care about. I hope you have a terrific week. I will talk to you next time. Take care.
This is thepodcastfactory.com.